I can't believe that you came into my life. You made me feel again. Now it's my turn. You say you've always been a little bit shy.
All right. So I am Toni Taylor with Interconnect Mortgage, and I am so incredibly humbled and honored to have Marissa Drake with Homelight with us today so that we can talk and share with consumers the Buy Before You Sell program and how this is making a difference for so many other people out there. So Marissa, I can't tell you how much I appreciate you taking the time to come and talk to us today so that we can make sure that the word is out there and people can achieve their home ownership, selling, and buying goals simultaneously. So thanks for joining us.
Yeah, thank you for inviting me, Toni. And yes, there's a lot of people that are out there looking for homes right now. And either they've just not had any success in getting their offers accepted because of the fact that they're having to make contingent offers, or they don't want to be able to, they don't want to sell their home first and then buy their next home. They don't want to be
Yeah.
stuck without something to go into. So thank you for having me here as well. I'm going to share
Yeah.
my screen just so
Awesome.
that.
And if I could, I want to just lead, as you're kind of getting your screen teed up here with some information that if somebody is just jumping into the front of this recording and or this in a future replay opportunity, if you will, that some scenarios that we've seen clients take advantage of because if you're coming in and you're not sure if this is of value to you, let me just share some stories with you about people. These are real life situations that we've been able to help people with this program. So one of the very first clients that I spoke to when we started using this program, we had a customer that was referred to us, and she was in contract to buy a home in another state. And she was under contract to sell her home in the state of Florida. And the buyer that was buying her home completely fell apart. And we had nothing to do with that financing. I have no idea why it fell apart, but it fell apart nonetheless. And she needed the cash out of that home to make that acquisition in the other state. Now, we weren't even doing a mortgage, but we were still able to help her. And Homelight came in, and she's actually scheduled to close on that in the next week. She's going to get that equity extraction out of that home here in Florida, and she's going to make a cash acquisition on her property in Georgia. So that's one scenario. Another scenario that we had happen that is also in process and moving along very favorably is we had a client that identified a property that he wanted to buy, and the sellers would not consider his offer with any kind of a contingency on his departing home. He had not even listed his departing home. So the listing agent was able to get the client introduced to us, and we were able to determine that they were in fact eligible for this program. And as a result of that, he was able to get into contract to write that offer, secure the contract. And he's under contract and we're underway. And he has not even yet listed his current home. He's in the process of that, which I know, Marissa, you'll get into some of those details. So that's another scenario. And I'll give you a third one and then we'll dive into this. We had another client that I'm working with that's actually in a situation where they live with an elderly parent. They've got a parent that's in their 90s, and they were referred to us, because they are really sensitive to making sure that a relocation is as stress-free for their mother. She's in her upper 90s, not in just her 90s, but her upper 90s. So they knew that showing their property was going to be incredibly stressful, and they're trying to move closer to other family, but they also own that property free and clear. So they need that equity extraction to be able to close. They did not want to have to deal with showings of the property and navigating that with the mom because of her condition. So this program helped her out as well. So hopefully, like I said, for those of you that are seeing this and you're not sure whether this is something of interest, those are three scenarios. There are dozens more that we have, and if you have questions or you're unsure, obviously always just pick up the phone. We're happy to help. So that being said, Marissa, I'm going to let you dive in here and, explain this to everybody so they know a little bit more about what we're talking about.
Sure, would love to. So as Toni mentioned, we created this program. It's called the Buy Before You Sell program. And what it allows someone to do is essentially buy their next home, their next dream home, move into it before placing their current home on the market. Let's face it, none of us, I don't think I know of anyone who looks forward to listing their home, let alone showing their home to strangers while they're still living in it. Because let's also face it, none of our homes look like model condition. We live in it. We're going to have some small messes here and there. And the last thing that we want is for an agent to give us a call and say, I need you guys to get out for about an hour so I can show this home. So this really solves that problem for a lot of people. And it just makes it so much more stress-free when it comes to buying and selling simultaneously. Now, let me kind of explain how this program works in general. Sorry about these tabs that are
The
popping
pop-ups.
up here. So the first thing that we're going to be able to help you, as most of you may already know if you've been out there shopping for your next new home, is that a lot of sellers are not willing to take contingent offers because that's very risky for them. So you're going to have to make a non-contingent offer in order for them to accept that. With this buy before you sell program, we're able to remove the contingency. Also, we're able to unlock your equity up to 75% combined loan to value. And your loan officer, Toni, will be able to explain what that looks like. But why that is important is because most of us don't have tens of thousands of dollars sitting in the bank account for us to utilize as our down payment for our next home. We need to sell our home in order to unlock that equity. Well, this buy before you sell program actually allows you to unlock the equity in advance so that you can actually use it on your down payment for that next mortgage that Toni will be able to help you with. Now,
something I think that's important to mention here too, Marissa, because we've all seen some markets that this applies in, the contingency buster piece of this. If you are in a market where there have been cash buyers coming in and beating you out on properties, this is an amazing tool, because the minute you can eliminate those contingencies, you start to become, put yourself on a level playing field with these cash offers. So that can do a couple things for you, right? As a homeowner, you may be able to be offering yourself a more competitive, or a more, a more, how can I properly say this without offending my sellers? But, you can be more negotiable. You can offer a more aggressive offer on that purchase of that new property coming in when you don't have those contingencies and you're competing against those cash offers. So that's really valuable for you.
exactly. And, we've seen it also firsthand. Contingent offers tend to have to be higher than, the listing price. So you're not only going to end up usually paying more for that new house, but you may also end up selling your existing home for less because once you get your contingent offer accepted, now you're going to be in a rush, or you're going to be in a tight time frame to get your home sold. So this is why it's really important to consider those factors as well. Now, most of you may not know, for loan officers, for them to get you qualified on your next mortgage, most people cannot afford to qualify for both the existing mortgage and that new mortgage altogether. So in order for that to not be included, your existing mortgage to not be included, we've also taken care of that for you as well. So with our buy before you sell program, because there is a backup non-contingent offer, now the lender will be able to not count your current mortgage obligations into that DTI of the new mortgage. So that's going to help you get that new loan approved and be able to help you move into that next home. So let's talk about what that process might look like for you. In order for your home to get approved for the buy before you sell program, your loan officer, which would be Toni, has to be able to submit the property for approval. And we're going to ask some questions, ask Toni some basic questions. After she submits a property, we will most likely, in most cases, require some photos. So what Toni will do at that point in time is she's going to take that URL, forward it to either to you or your agent to upload some photos. The photos are really easy. Most people will just go around the home, snap some photos with their cell phone, and upload it through the link that we provide. Once we have all the information that we need, we can let Toni know, usually within 24 hours, whether the property is approved for buy before you sell. And if it is approved, we'll also let Toni know exactly how much equity we can unlock from your home. and then she'll,
Yeah, I don't think you guys have ever even taken 24 hours. These come out very, very fast.
yeah, we can turn them out as quickly as we receive the information. This is why it's really important that we receive the information that we need as soon as possible as well. Your clients are great, and that's why, with the proper guidance, we can usually get an answer. I would say within 24 hours, we've gotten an answer in as little as 4 hours as well. But I would say 24 hours just to be on the safe side. So next screen, I'm going to walk you through what a typical transaction might look like. And this will help you better understand how the buy before you sell works. So you currently own a home that you will need to sell eventually, because once you buy your new home, you're going to want to sell your existing home. So we call the existing home the departing residence because that's the one that's going goodbye. So in this example, the expected sales price is 500,000. Let's say that you still have a mortgage on this property and the balance is 250,000. Now, as I mentioned earlier, we can take up to 75% combined loan to value. What that means is that if we multiply 500,000 times 75%, that will give us 375,000 to work with. But obviously you still have a mortgage balance of 250. So we'll need to subtract the 250 from the 375, which gives us the ability to unlock 125,000. So in step one, your property's been approved. We're going to let Toni know, hey, Toni, your client's property is approved for buy before you sell. We can unlock 125,000. Please let your client know that and let us know how they would like to proceed. I do want to let you all know in advance that getting qualified for the buy before you sell program does not obligate you to utilize the program. This is why it's always a good idea to at least get your property approved. If you feel that you can make a contingent offer and have that be accepted, that's fine. We're okay with that. Some people use it, some people don't. It's always going to be a tool in your pocket. And like Toni mentioned, sometimes you get an offer on your home, and for one reason or another, it doesn't close in time. And that's when
Yeah.
it's a good idea to get that property approved in case you do ever need to utilize it.
Well, and I think
Yeah.
it's something that I think is super important that I love about the way that you guys do this in the process is that when we put the client's information in to get that pre-approval started, everything is done very formalized. And what I mean by that is it's spelled out very clearly to share with the customer so that they can actually read for themselves and have this written guarantee promise laid out for them so that they're not in the dark about the numbers and about how the whole program works. And that's something, and it's specific to them. So it's not a marketing template that's pumped out. It is actually relevant to their transaction. And I don't know about you, but I prefer when I'm doing things, especially of this magnitude, I want to know the numbers are relevant to me and not something that has nothing to do with me. So I think it's super important. And, I'm going to add in here as well. So something, I mentioned one of the scenarios at the beginning is a lady was selling her home and the buyer fell apart. Well, if you could have the same situation for somebody coming to you and making an offer to buy your home, but bringing you a contract with contingencies, get them introduced to us because maybe what we can do is work with them to remove the contingencies on their side so that you have the added ability to sleep at night for the buyer coming into your home, as well as you moving forward for the acquisition of your new property. So this doesn't, it may benefit you from really both ends of this transaction in many different ways.
That's a great point, Toni, because sometimes it can be a domino effect. One transaction leads to another and another. In step number two, so now you've decided, hey, I'm going to go ahead and move forward with this buy before you sell program. At this point, you're going to be able to make non-contingent offers and hopefully get that offer accepted very shortly. I also wanted to remind everybody that this is a form of a bridge loan, but it's not the traditional bridge loan that everybody hears about. So it's a form of bridge loan because we're able to unlock your equity. But at the same time, there is no interest and there is no payment. Most traditional bridge loans not only carry high interest, but you're also going to be making payments, but also that payment will need to be counted towards the DTI of that, qualification process. We don't have to worry about any of that here. So that's a win-win-win for everybody. Now, in step 3, you have now found a property. Your offer got accepted. In this example, the new purchase price is going to be $600,000. And you're letting Toni know, hey, Toni, I know I've been qualified for up to, unlocking up to $125,000. I'm going to go ahead and use the full $125,000 as my down payment. Now Toni knows, hey, I need to work on a new mortgage in a loan amount of $475 so that she can put it through underwriting and get that approved. Once the loan is approved, a couple of days before closing, what we will do is we will wire transfer the unlocked equity directly to the title company or to the attorney's office so that you can actually close on your new dream home, get the keys, and move in immediately if you want. At this point, the close of escrow on this new home that you're buying is going to be the start, is when the buy before you sell program period begins. Their entire program period is 120 days. What that means is that we would like for you to get your home listed by day 21. So that gives you 21 days to move out, to prep your home for listing, and to move into your new home. You do have 120 days from the close of escrow to get your home sold on the market. Now, as I mentioned earlier, we do have a backup offer in place just in case you don't sell your home within the 120 days. But I want you to feel assured that if HomeLight does end up approving your home for the buy before you sell program, we're fairly confident that your home should be able to sell and close within 120 days. Because if we don't have the confidence that your home will sell within 120 days, most likely we're also not going to approve it for the buy before you sell program. Why is that important for you? Because we as a company really do want you to sell your home within 120 days. We only have that backup offer to satisfy the underwriting guidelines in order to remove your existing mortgage and also the unlocked equity from the qualification factor. So let me explain how that works because I know most of you are thinking about that right now. Well, what if my home is one of those, one of those few ones that ever go beyond the 120 days? First of all, we've done thousands of transactions. Less than 1% ever go beyond the 120 days. If it does, HomeLight will exercise our purchase agreement on day 121. We're going to buy your property for cash, and we are going to pay off the current mortgage that you have on that home. We're also going to pay off the equity that you unlocked with us. But that's not the end of it. I want you to know that you are going to receive any additional net equity coming from the sale of this home, because what we will do is we're going to immediately relist the property with your same agent. So we're not kicking any agents out of the transaction. We're going to relist the property and sell it at the highest market value possible, because we don't get paid and the agent doesn't get paid until this home actually sells. So once the home sells, you will get any remaining net equity wire transfer back to you. So that's how our guarantee works.
No, I love it. There's a couple things in here that I think are also noteworthy. If you had already had a second mortgage on your home, when they do the equity unlock, they're going to liquidate those. So if you're paying interest on, which if you have a second mortgage, you're paying interest on it, you're now shifting those monies to a 0%. So you've got that equity unlock at 0% interest on that. And then also this backup. So one of the frequently asked questions that I get, Marissa, is when you go to sell the home, can you kind of walk through the breakdown? Like if you, God forbid, let's go worst case scenario, HomeLight had to buy this house on day 121. and now you've marketed it with the agent, you finally find a seller. How is the math done to determine what your original seller is going to get back? Because there are some additional expenses at that point in time that are going to get added to those mortgage payoffs. Can you walk everybody through that formula, if you will?
Sure. So what typically happens is that we are going to purchase. So if we do end up having to buy the property, we're going to purchase it on paper. It's going to be the expected sales price of 500,000. Now, we will pay off the existing mortgage balance of 250 plus 125, which gives us the total loan payoff value of 375,000. We know there's still equity there in the house. So what we're waiting to do is once the home actually sells, we're going to back out the closing costs because that needs to be paid just as if you own the home. We're also going to be paying the real estate commission, and we will also be get paid our fees. And I forgot to cover that the program fee for the buy before you sell program is 2.4% of the sales price of the departing residents. And the reason there is an asterisk here is because it's either 2.4% or $9,000, whichever is higher. So down here is small print. If the home sells for less than 375,000, it would be a minimum of $9,000 fee. Now, as far as when we do end up buying the home, there's going to be some carrying cost. So the carrying cost would be similar to as if you still own the home too. That will be homeowners association fees, utilities, because we need to have the utilities on. There's going to be homeowners insurance that needs to be maintained. So in the meantime, HomeLight will pay for those fees, but we're going to, get reimbursed at close of escrow. So those are the fees that we will be deducting from the final sales price, real estate commissions, our fee, closing costs, and holding fees. Anything left after that will be your equity that we will wire transfer back to you as a homeowner.
So Marissa, I want to go back here and just clarify something real quick, because I'm guessing you said something and maybe I just misheard it wrong or heard it incorrectly. You would actually be buying the house for whatever the dollar amounts were for the mortgages, not the actual what we think the market value is, correct?
I'm glad you brought that up because I did forget something. So yes, so on paper, we will buy it for 500,000. The only reason we're doing that is because we don't want to devalue your home because we do need to relist it. So the remaining 125,000 will be a seller credit in the meantime until this home actually sells.
Okay. Okay, that's great to know. So yeah, so basically a seller credit. So you're not, if you are selling your home and HomeLight has to come in and buy the house on day 121, you're not going to walk with 500 minus expenses. They're going to show that spread. And the reason being is because we don't know what the final sales price is yet. And they've got to obviously make sure that there's room to absorb the carrying costs, et cetera. And then when the house does officially sell, whatever that final sale price is minus those expenses is what the customer is going to net. So, and I love that you brought up, if you still owned the home, you would have those same expenses. It's the insurance, the taxes, the HOA, the lawn maintenance, the pool, whatever those kinds of, carrying costs are that you have if this home was still in your possession.
Right. I do know that there are some questions, and if we can hold off the questions until the end, if you could write the questions down in the meantime, I'll make sure the questions are answered.
Perfect.
So this is more with Toni and the listing agent who will be listing your home. Once the property is submitted, Toni, we're going to assign different team members for both Toni and the listing agent as well. And this is the state, these are the states where the buy before you sell program is available. The dark blue states and also anything listed on this side, they're all the same states. What this means is that your current home that you own has to be located in one of these states in order for you to take advantage of the buy before you sell program. We don't care where you move to. We only care where your current residence, the departing residence, is located. And we are working on getting all 50 states approved, hopefully by the end of this year. Now let's take a look at the requirements or the eligibility, bear in mind, this is not the end all be all eligibility requirements. Each property that gets submitted to us will go through our algorithm, and we will determine on a case-by-case scenario which ones we can approve and which ones we can't approve for buy before you sell. So if there is enough equity, we can actually unlock up to $2 million in equity. Obviously, needs to be a minimum of 1 bedroom, 1 bath. And the types of properties that are eligible are single family homes, townhomes, and condos. Now, we won't be able to approve high-rise condos. So anything above 4 stories would be considered high-rise condos. Also, if there is a homeowners association fee with a condominium, we need to make sure that the association fee is less than 1% of the value, because we do know certain areas, the association fees may be very high. And if it's one of those situations, we won't be able to approve for buy before you sell. We also want to make sure that the property is in sellable condition, meaning that there's no major ongoing repairs or renovations. If there are major repairs or renovations that are required, we absolutely do want those to be complete before we approve the property for buy before you sell. And the expected listing days on the market should be 90 days listed pending, so that way we can make sure the home closes within 120 days. We will consider properties that are already listed on the market. But the one thing to take into consideration is that if it's been on the market for over 150 days, most likely we will not approve that. That's usually an automatic fail. If the home's been on the market for a little bit, the longer it's been on the market, the less likely that it will get approved for buy before you sell. And also, it may impact the amount of money that we can unlock, the equity that we can unlock for you. So it is really better to get approved for buy before you sell before you list it on the market. But if it's already listed, it's not an instant disqualification. I would still encourage you to get your property approved to see if we can approve it. We want to approve properties, but we have to be very careful in which properties that we approve for buy before you sell. And I just want to go over some of the most frequently asked questions. So the buy before you sell program fee is 2.4% of the final sales price, or $9,000 if the sales price is below $375,000. There's also one thing that I forgot to cover, and I definitely want to bring this up. Some of you out there may say, you know what? I don't need the equity. I just need that backup offer so that I can qualify, remove my current mortgage obligation from the DTI, and also make non-contingent offer. I have money set aside, so I don't need to worry about the down payment. If that is the case, we do have a reduced fee program, which is 1.5% of the sales price of the departing residence, or $7,000, whichever is higher. As far as how the equity unlock works, there is no interest and no payments. Now, if your departing residence is over 5 years old, we'll want an inspection to be done just to make sure that it is in sellable condition. We're only looking for major structural defects that may prevent the property from selling. So, some people, they rather order that inspection up front, and as long as the inspection is within the last 3 months, we're fine with that. Some people rather wait until they go to contract on the new home before ordering inspection, and we're fine with that as well. It's however you want to work that. We also get a lot of questions as far as what can we use equity for? So not only can you use it for down payment, you can use it to cover your closing cost. You can also set aside a little bit of that to cover the mortgage payments on the departing residence while it's being listed for sale. You can also use it towards moving expenses, listing prep, and even pay down some debts if you need to, get qualified for a slightly higher mortgage amount. So that is it that I have to cover with these slides. Now we can go ahead and answer some questions.
Yeah, so Marissa, I've got a couple of questions that are popping up over here. So one of the questions, and I actually hear this one a lot, in the age restriction communities, are those automatically disqualifiers?
Oh, great question. So if your current home, the one that you're selling, is in an age-restricted community, those would automatically be disqualified. On the
Okay.
flip side, though, if you're selling a regular community, that's where your home is located, but you want to move to an age-restricted community, that's fine. We don't care about that.
Okay. All right, great. Another question that I've got over here is you mentioned on here that if they don't need the equity unlock, the fee is reduced. So let's go another direction on this. Let's say in the core, I use the program, I've got my contracts, and my agent was able to sell my home, and I now have a simultaneous closing date. How does that affect the cost of the program?
Sure. So as long as you've utilized the backup offer to get your new home purchase approved, um, we will. So if you ended up not having to unlock the equity in order to close on that new home, but you did utilize a buy before you sell program to get accepted, at that point, we will reduce that fee to 1.2% or $6,000 minimum.
Okay.
Great
So,
question.
wow. Okay. That's fantastic. And then another thing that we've seen come up in some of the areas, we've got certain communities that just our roofs are at life expectancy. Can somebody use any of those equity unlock proceeds in order to do major repairs on the house, or do those things need to be done before they enter and receive any of those proceeds?
They really do need to be done before they receive any of those proceeds, because even if, let's just say, we're able to unlock enough for them to do the roof repair, usually it can't be done within the time frame. So we really do want those major repairs to be done before we even approve it.
Okay, fantastic. Well, look, Marissa, I can't thank you enough. I know we're coming to the top of our time frame that we allotted here. And obviously, if people have questions, they can reach our team at 561-373-0371. And I think that, the big thing I would encourage anybody listening, if you're not sure whether or not this is something that's a fit for you, let's have a conversation. It doesn't take anything but a little bit of time for us to explore your specifics. And we have found that every single situation is unique, and the direction that we take is unique accordingly. So don't hesitate, don't be shy about reaching out and inquiring. And if you are considering selling your home, or maybe you're taking offers on a property right now, and those incoming buyers are offering you to buy with contingencies, it would be a great phone call to make so that we could get involved and see if we could remove those contingencies and give you the peace of mind as a seller that you've got things going off without a hitch, and you don't have to worry about that incoming buyer or something falling apart there. So, Marissa, I cannot thank you enough for taking the time to come and educate us today on this program. We love the program. We appreciate everything you do for us from an education standpoint and a support standpoint. And as always, appreciate you taking the time. And again, if you guys have any questions, you can reach us at 561-373-0371. Marissa, anything else that you want to add before we let everybody go today?
No, I think, that we covered just about everything. I would just really stress, if whenever you are looking at buying and selling, just go ahead and allow Toni to submit your property just to get it approved. You're not obligated to use it. It's a great tool to have in your back pocket.
Yeah, agreed. Again, thank you so much, Marissa, and we will talk to you soon.
Thank you.
I can't believe that you came into my life. You made me feel again. Now it's my turn.